So I'm looking at the Ghana stock market, which delivered a negative 12.38% index return last year, with big names on the counter losing heavily, around 60% of their price value. The country's currency, the cedi, also went through a rough patch as the country's macroeconomic indices took a beating. But let's have what I call a forward-moving conversation in the new year, 2023, with Fred Duvor, who is a licensed dealer and the CEO at Apacan Securities in Accra. Good evening, Fred. Welcome to the show tonight. Akwaba, let's get this running. It's good to see you first time in the new year, my friend. Okay, so let's get straight to business that way, because I'm asking how much dent did the state of the macroeconomy last year made in the investors' return on the local market? Talk to me.
Well, I mean, last year was a very turbulent year for the Ghanaian economy. All the macro indicators were on a downward trajectory. We all know that inflation closed the year around 50%. The cedi depreciated against the USD around 35%. Economic growth slowed significantly. Interest rates were through the roof. There were also multiple downgrades of Ghana's sovereign debt to junk status by Fitch and Moody's. So last year was a very tough year for the Ghanaian economy. Investors lost a lot of value, both in the fixed income market and the equity market. Bond prices were trading at significantly steep discounts, up to about 50%. And the equity market also lost close to 13%, as you already mentioned. So 2022 was a very difficult year for the Ghanaian and more so investors in the Ghanaian economy.
Oh, great. But again, how is the new year 2023 starting off across the various asset classes? Let's start with the stock market. Today, the GSE All-Share Index fell by 0.1%. How's it been since last week, Tuesday, when the new year formally reopened?
Well, I mean, like as you rightly said, the market is already down 0.09%. It seems like the trend from the Q4 2022 seems to be continuing in the first month of this year. I don't see that abating anytime soon. With respect to other asset classes, like the fixed income market, that has literally ground to a halt as a result of the ongoing domestic debt exchange program that was announced by authorities. Liquidity in the bond market has literally dried up, and until the conclusion of the program, I don't foresee any significant activity in the fixed income market.
But what is the outlook on the critical macro issues that were unfinished last year? Inflation is still at a very high level. Debt is being discussed. The Central Bank of Ghana says it's going to sell about $200 million to the BDC, Bureau de Change operators, in this first quarter. Where's the money coming from? And what could all of this mean for your market in the new year that is just getting started, Fred?
Yeah, I mean, we know inflation in this country is closely tied to the stability of the currency, and that is why the central bank has implemented the method of targeting certain sectors and selling USD to them directly. They're not doing so will mean these guys will come into the market, and that is going to put pressure on the cedi. Now, in December last year, the cedi recovered some losses that it had made against the USD, which saw a reduction in prices of fuel. And some trader unions also went ahead to reduce price of their goods. So I expect inflation for the month of December, which will be published tomorrow, to fall below the 50% print in November. However, we've also seen that the cedi in the first few weeks of this month has come under a bit of pressure. So we look to see if this decline in inflation that I expect from December will follow through this month. But in a more general sense, I expect that we'll see inflation trend downwards the second half of the year, largely owing to the base effect. And if we do also secure a board level approval with the IMF, that should bring some stability to the currency, and that will ultimately translate into stable consumer prices. On the debt exchange program, however, the deadline for investors to tender in the eligible bonds is 16 January. That's next week, Monday. And as it stands, we're not very sure on the level of participation, but it will be announced following the deadline. So I believe that this year is going to be a long year for investors in the Ghanaian market, as we're currently in uncharted waters where we face this debt exchange program and we're dealing with high numbers on all the macro counters.
Well, Fred, I'm sure you market dealers and market professionals do talk to yourself, from Apakan Securities to other security houses. What's your take as far as the debts program is concerned? We've seen at least two shifting in the deadlines, as it were, since it was first announced or so. So are you guys who are market professionals, licensed dealers who trade across all asset classes, including fixed income, what's your take on what investors should expect this year in terms of what yield will likely come to them if they are holding any of the fixed income dated government securities in CD terms and perhaps in dollar terms? What's the outlook? What's the common talk? Talk to me. What's in the chat room?
Well, I mean, the common rhetoric around is investors, both institutional and individual investors, are not very pleased, largely with the terms of the new bond. When this was announced earlier on 5th December, there was a lot of pushback from largely from pension funds who at some point labor unions threatened to go on strike if the government included them in the program. And there was further stakeholder engagement. That was when the government reviewed the initial offer memorandum and changed the number of bonds on offer from 4 to 12. It kind of tried to create a yield curve for the bonds to be tradable and all of that. But what it also did was that with the initial announcement, it excluded individual bondholders, but with this, with the new amendment, it included individual bondholders. And as we speak, there's a talk about individual bondholders forming a group and taking some sort of class action. So there's a bit of pushback and inertia and murmuring and complaining about the structure of the new bond, because if you do the NPV analysis of the structure that the government has put forward, investors are looking to lose anywhere between 50 and 60% of the value of their bonds in present value terms. So people are really not happy with it. But the question that is asked is, what is the alternative? Because it seems to be a prerequisite for the country to secure a board level agreement with the IMF, failure of which the economy is going to be under a lot of pressure. So we're caught between a rock and a hard place, and I believe that ultimately we will find middle ground somewhere.
Okay, just to sum it up, Fred, in just about 1 minute or less, is the financial system in Ghana considered safe as we speak, based on these macroeconomic issues that we have on the ground? How safe is the financial system? What are you hearing from the authorities?
Well, it's difficult as things stand. Everybody what we know from theory is that sovereign risk is usually considered to be risk-free. But as things stand now, looking at the whole financial system, we have, if you look at the people who are exposed to government debt, you have banks holding a very large portion of government debt and having investment in these bonds. Now, with this new debt exchange structure, which is not going to pay any coupons in 2023, neither is it going to pay, it's going to pay 5% in 2024. So the banks are going to be constrained for cash flow. And if you look at, if you do the NPV analysis, a lot of value is going to be lost in these banks. The banks are really going to be under pressure, just as insurance companies and the like. The government has tried to sort of alleviate some of this pressure by announcing the creation of a financial stability fund, which should support the liquidity in the economy. But at this moment, there is a lot of strain on the financial sector, and both asset managers, brokers are feeling it, banks are feeling it, and the entire financial system is feeling it.
So thank you so much for lifting the curtain on the Ghana market in the year. Thank you so much, Fred Duvor, licensed dealer and CEO at Apakan Securities. Wish you all the best in the new year and on your market straight in Accra.